Welcome to What's in Store with Carly and Chris, the show where we cover hot topics at the cross-section of retail and real estate. I'm your host, Carly Iacono, and I'm joined by my co-host, Chris Ressa. Chris, good morning.
Good morning.
We are getting fancy today on What's in Store. I've been waiting for this moment. No, I'm kidding. Not my world. But we are talking about some interesting things happening in luxury retail.
Yes.
Are you ready?
I'm ready.
I could see you dress the part for it today.
Yes.
Okay, good.
Yes.
Glad we're on the same page. So we're going to talk about I think it's 4 big trends that we're seeing. And the first one is something that affects everyone in real estate specifically. And that is the trend of luxury brands buying their assets, buying their real estate. And this is so interesting because it's in direct contradiction to most companies who are not owning real estate. They're doing sale leasebacks. They're spending their money operationally. Luxury brands, we're seeing the opposite, where they are investing not just small amounts of money, millions or billions of dollars, right? To acquire sometimes their flagships, sometimes just key real estate. So we want to talk about why. Why do you think luxury retailers are spending so much on owning their own physical locations?
So I think when traditional retailers, more mainstream retailers own real estate, one of the big premises of that is, which is rare, except on some of the larger big box retailers or old school department stores, is they have a long-term view, and they believe that they're going to grow revenue and EBITDA in this location for a long time, and they don't want to be held hostage and potentially lose that location upon an expiration. It's hard to find locations that are that large. It is, and if you've had a customer coming to that location for 20, 30 years, to uproot that and disrupt the business is not ideal.
I think let's pause on that for 1 second. That's a great point. It's not easy to just relocate because the location is part of the identity in a lot of cases. Whereas with most retailers, you could be 2 miles up the street and you're not going to lose part of your identity.
From the identity piece, you might change location and how powerful that location is.
Correct.
But from an identity piece, yeah. And so speaking of identity, I think in the luxury space, the brand means so much to the consumer, right? And it's a brand value, and brand equity is definitely something much more discussed as it relates to real estate in the, fashion-oriented brands, right? And some of these luxury brands we're talking about are in that sphere. And I think the real estate plays such an important role in the brand identity and communicating to that consumer that they believe that controlling their own destiny is critical in that brand identity and building brand value and building brand equity.
How much do you think increase in rents has played into this? Because there's been a pretty sharp jump on key areas like Fifth Avenue and Rodeo Drive and all of
Soho,
these really,
yeah.
right? So big markets. Do you think it's an effort to control rent, or is that not as big of a piece of the story?
I'm sure it's always, rent, the financial and the economics of it are always a function at play. However, I would love to see some of the rent to own analysis that is being done on some of the deals that are being purchased, because these are not inexpensive deals that are getting done. And so while the rent might be high, the purchase prices, as you can see, are not inexpensive that are happening in these assets.
We'll just run through some of those that I have here now because they're amazing. Ralph Lauren bought 93 Newberry Street in Boston for $37.8 million. Prada acquired 2 buildings on Fifth Avenue for, wait for it, $835 million. That's a lot of rent. That is a lot of years of rent, $835 million. We've got LVMH invested $2.66 billion globally in the last few years. And these are all recent numbers, right? This isn't like from the dawn of time. This is just in the last few years. So those are very big numbers. So I think to your point, it's not just the avoidance of rent, because There's a long time to make that up. There's more at play there.
Yeah, for sure. And the other thing I think that plays a factor is these retailers are not in the saturation retail game. They're not in the we can be even in many markets game. They're not in the scale rollout game. So I think it's different if you're Dutch Bros, who's going to open up, hundreds, or Seven Brew or Starbucks, who are opening up hundreds of locations, that the business model works in multiple markets. That's different here. These companies are making a bet on a very specific marketplace for a very long period of time. And the plan isn't to be in every suburb in America like some of the other brands. And I think that plays a part in should we rent or should we own, for sure. But just by example, I don't know if you have it. Do you know what the square footage was of any of those buildings? Like the Ralph Lauren?
Ralph Lauren was 13,000.
So $33 million for a 13,000 foot building.
$37 million. Yeah, $2,908 a square foot.
So, I mean, that's...
It's a big number.
Right. So if you just take that over a 10-year period, it's $200, $200 right. a foot in rent on a 10-year period. Right. So it's a big number. If you spread it over 20, you're at $100 a foot. We're not talking inexpensive purchases here.
Correct. Do you think some of this is driven by ego instead of business decisions? They must have a physical location that they own under their corporate structure in some of these markets that are so difficult to get into? Or do you think this is all business driven for long-term stability? It's kind of a hypothetical because we'll never really know, but
I don't think it's ego here, personally. I think with all the data that these brands have about their customer, what's working, these are global, worldwide brands, and they've got really good indicators of what's working around the world. And so I think this is super strategic.
And the last contrarian point I'll bring up, do you think there's any danger from limiting agility in shifting markets, shifting consumer sentiment potentially over time? And this is a big investment in one location, which obviously has long-term stability implications, but it also reduces agility. Do you see any danger from that?
I don't, because I'm talking my own book as a real estate owner, right? So we're buying real estate, so you could say the same. But I think the biggest agility that someone has in that space, they have the same agility as a landlord, in my opinion, right? So either A, if it doesn't work for them, they could lease it out, or they could sell if they want to exit the market. So that's no different than a real estate investor's agility in that circumstance if the market moves, right? They either operate the property better, they find a better tenant, or they sell it. So I don't think it reduces agility. I think it helps them control their own destiny and create the brand identity they want.
Because they're doing this on such a specific location and such a localized plan, in contrast to Dutch Brothers or companies that are expanding quickly, they can really, I guess, focus in on specific locations and take the time to manage them. That's the difference, right? I usually say I don't feel that most brands should be real estate investors. Those are two different businesses, right? Operating your core business or being a real estate landlord, those are very different skill sets. But perhaps if you're doing this on a small number of locations that are so core to your brand, it's worth the effort, or it's worth building those other skills.
And so you made a point of you use the word brand a lot. And I think that's, is every retailer does brand mean the same thing to every retailer, right? And you can buy Ralph Lauren or, Louis Vuitton stuff in third-party retailers like department stores and, and other specialty retailers. But this is their own store. They're direct to consumer. And this is their own flagship, most of these. And so I think that plays a part of it is what is brand, right? I think it means different things to different companies.
That's a great point.
Yeah.
And that slides us right into our second topic, which is looking at flagships, whether rented or owned. it seems to be a resurgence of large, very impressive, very high TI dollar locations that represent the identity of the brand, not just from location, but from consumer experience. Now, we're well past the conversations of COVID that everything, must be efficient and it's all about value and closest to the consumer, right? This is the opposite side of that conversation, that the consumers want an experience. They want to be connected to the brand in a different way. So do you think the flagship is really increasing in cruciality because consumers want experience now because they're craving something more in person? Or is it almost like a billboard that you can see the products, they're there, and it's a reminder of the brand itself?
It's probably all of the above.
Okay.
I think one of the things that happened is, that 2009 to 2019 era was, for most of these companies, forget about the word brand, just these companies, was the digital expansion era, right? So in 2013, was it really about building a flagship, whatever brand you were, company you were? Or was it about how do I scale my e-commerce? How do I build the infrastructure of that? And so there was a shift in focus. And so if you just go, I think things are cyclical, right? There will be a time where a flagship isn't a darling and we'll go back to something else and it'll go up and down. And I think we're at the point in time where, retailers are, flagships are back and they're focused on flagships. And so I think it's cyclical in nature like that. And I think one of the key reasons is we had this big digital expansion time frame where that was the key focus. And then you probably wake up and you look at the portfolio and you start to look at, well, how can I make an impact physically? And for some of these companies, flagships are always core to what they did. And that's probably a way to, really roar back physically.
And I think especially in luxury retail, the flagship is the connection to the brand. Luxury exists because of a feeling.
Yeah, for sure.
It's not a need, really. I mean, if we come down to it,
yeah,
right? It's
sure.
a feeling that it's something special. It's exclusive. You're part of this group of people. So if the flagship is done right, with all the elements they're adding, dining, right? Appointments, concierge services, it's so much more than the product that maybe you're buying, maybe you're not. It's a connection almost to a lifestyle and an identity for the consumer. And I think if you're digital only over time, you lose some of that connection. You lose some of that experience of this is who you are, not what you're buying. And I think brands are realizing that, yes, you can get products to consumers in a lot of ways, but it's very difficult to make them feel the way you want their brand to make them feel without an in-person experience.
Nailed it. There you go.
So flagships all around.
Yeah.
For the key brands. I can't really think of any contrarian perspectives except maybe it's quite expensive. And then do we think consumers are going to spend the time there that the brands are hoping? Right. I mean, it's very difficult to capture attention. It's wonderful to say, yes, I'd like to go there, but how many times are the consumers going back? How connected are they? And how do you keep that attention once you build this beautiful place?
Well, I think there's a couple of things here, right? So I mentioned one piece on the digital expansion. The next thing that slowed some flagships down was tourism from COVID. Right. So these locations are usually heavily tourist attractions. Right. And then they're usually pretty urban. And you had this, work from home, work remote piece. And so now you have the confluence of the reverse, this physical importance for, brands, right? This real estate importance combined with tourists coming back because we're out of the COVID, combined with there's a return office. And now you have all this coming back, which probably makes it a good opportunity for them. And, I think one of the things is they've been working flagships for a long time. And now these flagships, they probably will, to increase the experience, have much more digital connection in the store. They will be in they're going to have all these different services. The flagships of today, I think, are going to be much different than they were in 2003. And I think that's pretty exciting for these companies.
Absolutely. We'll have to go on a tour of flagships.
We'll have to go. We'll have to do a what's in stores at some point.
Oh, I love it.
We haven't done that. We have to do a what's in store in stores.
Okay. That idea was born right now. That's
there you
great.
go. I was literally at a Starbucks where in the DC area where they had a meeting space where you could go and do stuff. And like I thought about I was wondering if we could rent that out and do the podcast in the Starbucks.
Don't give away all of our ideas. I want to really copy them, but good idea. Good idea. Let's shift now to the next trend that we're seeing, and that is taking the luxury real estate off Fifth Avenue, out of Soho, and moving it to high-income secondary markets, or I would say high-income suburban markets. So kind of the opposite of everything we've been talking about. And these two ideas can exist in tandem, right? It's not one or the other, but there's a push for brands to reach very wealthy, high-end luxury consumers in different areas. So not the vacation tourist areas, which are great and are a focus, but Westchester County, New York, right? So Short Hills, New Jersey happen to be areas around us that we know. And I think the reason for that is now the wealthy consumers are spending more time outside of these financial districts, right? You're not in the office 5 days a week. And maybe they want that brand experience closer to home. They want the convenience, the privacy of connecting with a brand without having to go to a major hub. Where are you seeing this? And do you think this is just kind of a blip for a few brands, or do you think we'll see more luxury in suburban markets?
Yeah, I think luxury in suburban markets, I don't know that it's new, right? The Short Hills malls has been around for a while, and they've had luxury brands in some of these big major malls, where it's Garden State Plaza, King of Prussia, the Westchester Mall, they have luxury brands. I think that the luxury brands are trying to figure out how to bridge the gap for convenience for their core customers, right? And there's been, starts and stops of this along the way, right? We had Nordstrom Local, right, that wanted to do some stuff like this. And I think that now, and I'm not really even sure, what Nordstrom is doing with Nordstrom Local right now. We've done business with them as doing Nordstrom Rack, which is on the value side. But I think generally speaking, that consumer has been spending. The tailwinds are in favor of some of these luxury brands, and they're trying to maximize. And one of the ways, I think, is how can a luxury brand be more local? Because even some of the ones that you're talking about, right, Short Hills and the Westchester Mall and King of Prussia, these are like top tier destinations, right? Even some of the locals, try to stay away because they're so packed and driven, right? So I think finding a way for luxury to be able to profit through convenience is super interesting, and we'll see what happens. I certainly don't have the answer to it, but it'll be interesting to see.
I think it's going to be a balance of exclusivity and convenience, because the luxury brand thrives on this mystique of only a few can have this product, and you're special if you have it, and your connection to this lifestyle like we were talking about before. So I wonder where that inflection point is. You can't have a Prada in every, local shopping mall.
Sure.
It's not going to work brand-wise, but maybe there are a few areas where you can have a smaller store and capture some more attention and some more market share by being more visible. So that's a really interesting balance to me of how you reach more consumers without giving up exclusivity.
For sure.
It's tricky. And from the investor standpoint, if someone wanted to focus on luxury brands, or they thought this was a part of the market that they wanted to be a landlord for, I would imagine they would look at, of course, these tourist destinations, places with population migration, and then high-income suburbs. I mean, how do you see this evolving as an asset class on its own?
I mean, I think like on a public forum, right, you have groups that have this in their portfolio, right? You have Simon, Acadia focuses on high street retail, and you have this form. What I think is and they know that all those companies, Federal, they know this space super well, right? Taubman was like the genesis of this, and then Simon bought Taubman. What I'm curious about, like on this, right? And we've always had, like, you know, in New York especially, some super sophisticated local investors who own buildings in New York, and these are the tenants in these buildings. I'm curious if, like, will that, you ever see a 1031 investor owning the doing a sale leaseback with the Ralph Lauren on Newbury Street? I think it probably ends up in the hands of someone much more institutional if that comes available. But it would be interesting for sure, right? I think it ends up in the hands of someone much more institutional. But like, I didn't look. I wonder if Realty Income, I'd love to know, I haven't looked. I wonder if they have any luxury pieces of real estate.
It's a good question.
Right.
I'm not sure.
Yeah.
But yeah, I wonder if we could find out.
Have you seen any trade?
So I've worked on some high-end luxury condos in Charleston.
Okay, there you go.
Their main street, and our bidders were a mix. So we had, it was 6 condo units on King Street, and the bidders were individual condos were bid on by high net worth individuals who wanted, I think, the notoriety of owning XYZ store and location. So just what we were talking about. But the majority of bidders who were competitive were for the full portfolio, which was quite pricey, and they had experience in the space. Like you said, it wasn't Realty Income on that deal, but they were more institutional, and they had deep knowledge either in that market or with those brands in other locations.
Yeah,
so
for sure.
I think, to your point, that's really where this goes. But I could see the individual investor, the high net worth individual, getting excited or involved in markets that they know well.
Yeah.
So the last thing I want to touch on is the other side of the luxury spectrum, and this is the resale market. I personally thought this was just kind of an online-only fad, right? Like I think the Real was one of the ones I had seen before where you can purchase online goods. Turns out that is not at all the case. This is a huge part of the market that's growing. And what's so interesting from our perspective is that they are now leasing physical space on some very prominent corners. So I'm going to read you some of the companies because I wasn't familiar with a lot of them. Maybe you are. The Real, Fashion File, Rebag, Varelli. I might even be saying that wrong. That's how little I know about this space. But the fact that we see these resellers, some are supported by luxury brands themselves, some are third party entirely, opening on very prominent locations and paying high rents, kind of speaks to the validity of this business. And from what I'm hearing, it's looked at as an entry point to luxury. So the brands are embracing it instead of saying, we don't want, the next gen of merchandise out there on a resale perspective. They're saying, yes, if we can certify that this is legit merchandise and not fraudulent, because that's a big problem. But if there's a certification process that everyone believes in, this is a way for us to reach gateway consumers to the brand. Maybe younger shoppers, maybe people who are aspirationally shopping. So I think that's bigger than I had thought. What are your thoughts on resale luxury and how that plays into real estate?
I think it's, before this, I hadn't really looked at it as the gateway into luxury. Super interesting way to do that, because historically, you would see things like there would be, someone would create like a less expensive product, or maybe they would, maybe outlets were a gateway. But I think this is an interesting one because it has some brand representation in a luxury format in these luxury real estate. And then it's the same product, just maybe, on a resale basis. And so I think this is super interesting to like really get that brand identity and brand awareness as a gateway. I'm curious to see how it scales and executes. Some of these brands have been out for a while, and I think they're still working through it. There's a lot of kinks. But I think the key piece is the embracing from actual luxury brands. I think that's the key. If that starts to happen, then you could see a lot of different avenues of success if this is like an actual channel to create brand awareness and brand equity. So again, it's a space I'm not super familiar with, but I think it's super interesting. And like I think the key is, do we have this actual partnership where the luxury brands embrace this and are not concerned by it?
I think the key is authentication.
Yeah, for sure.
That's been the issue, I believe, with these brands over time is this real? Is it a fake? It's like sometimes very hard to tell. But if there was a verified way to tell that this was an actual...
Have you ever bought a fake bag and think you were buying a real one?
I mean, I haven't, but I don't really try to play in that space, right? I'm pretty down to earth here. But I'm sure it's happened to people,
it certainly
right?
has, yeah.
I'm sure. So I think we could solve that piece. And I have absolutely no idea how you do that for a leather handbag. How do you tell if maybe there's numbers and they're tracked somehow, right, with barcode? I'm not sure. But I'm certain the brands have figured this out, or they're on their way to figuring it out. So if you could get comfortable with that piece, then the value holds so much more. Because what I think nobody wants is for these resellers to pop up with a bunch of counterfeit goods that are probably quite lovely, and they're selling them at a discount because they can, and it just waters down the brand overall. So that's the danger, right? You have to maintain the exclusivity, maintain the price points, even on resale, but make sure consumers are getting what they think they are, or there's no value there. So
got it.
I'm sure someone's solving that right now, and it sounds like they are.
Yeah, for sure.
And that's going to translate to retail real estate, which is the last piece, because these have been online marketplaces for the most part, which I think makes that authentication process even more difficult. So having a physical store would bring an element of trust to the consumer if there was a process by which the goods were validated in person. So maybe that's been the missing piece. And
maybe.
Seems like these brands, or the resellers, I should say, that the third parties are figuring it out, hopefully in partnership with the brands themselves. So we could have a whole nother depth to this asset type.
Maybe.
I think we're gonna have to make this a new official asset type: luxury retail real estate. Its own segment. Its own segment.
Cool.
All right. Well, this was interesting. It's a space, again, that you don't hear a lot about, but there's a lot of things changing. And it sounds like it's really coming down to control and maintaining the relationship with the customer, which is a great long-term way to look at the business.
For sure.
To everyone listening, that was this episode of What's in Store with Carly and Chris. We're so happy you tuned in, and we look forward to seeing you again very soon. Have a great day, everyone.